Imagine this. You're 40 years old, sitting on a beach, sipping your favorite drink, and you've just checked your investment account. It's worth over $1 million. Sounds like a dream, right? Well, what if I told you it's completely possible, even if you're starting from zero? In this video, I'm going to show you exactly how to build a $1 million portfolio by the time you're 40. No fluff, no complicated jargon, just a simple step-by-step plan that anyone can follow. So whether you're 20, 30, or even 35, stick around because this could change your life. Before we dive into the steps, let's talk about why this goal is absolutely achievable. The secret? Compound interest. Albert Einstein called it the eighth wonder of the world, and for good reason. When you invest your money, it grows over time, and the earlier you start, the more time your money has to grow. For example, if you start investing at 25 and contribute just $1,000 a month with an average annual return of 8%, you'll have over $1 million by the time you're 40. That's the power of starting early and staying consistent. And don't worry, if you're starting later, I'll show you how to adjust the plan to still hit your goal. Step 1 is simple. Start as early as possible. The earlier you start investing, the less you'll need to contribute each month to reach $1 million. Let's break it down. If you start at 25, you'll need to invest around $1,000 a month to reach $1 million by 40. If you start at 30, you'll need to invest around $1,800 a month. And if you start at 35, you'll need to invest around $3,500 a month. See the difference? Starting early gives your money more time to grow, which means you'll need to contribute less overall. So, if you're in your 20s, don't wait, start today. And if you're in your 30s, don't panic, you can still catch up, I'll show you how. Step 2 is all about setting a monthly savings goal. To reach $1 million by 40, you need to know exactly how much to save and invest each month. Here's how to figure it out. Calculate your timeline. If you're 25, you have 15 years to reach your goal. If you're 30, you have 10 years. Estimate your returns. Historically, the stock market has returned an average of 8% per year. We'll use this as our benchmark. Use a compound interest calculator. Plug in your numbers to see how much you need to invest each month. For example, if you're 25 and want to reach $1 million by 40, you'll need to invest around $1,000 a month. If you're 30, you'll need to invest around $1,800 a month. And if you're 35, you'll need to invest around $3,500 a month. The key here is to automate your investments. Set up automatic transfers from your checking account to your investment account every month. This way, you're consistently building your portfolio without even thinking about it. Step 3 is where most people get stuck, choosing the right investment vehicles. The good news? You don't need to be a Wall Street expert to build a $1 million portfolio. In fact, keeping it simple is often the best strategy. Here are the top 3 investment options I recommend. Index funds. These are funds that track a specific market index, like the S&P 500. They're low-cost, diversified, and have historically delivered solid returns. ETFs, or exchange-traded funds. Similar to index funds, ETFs are a great way to diversify your portfolio without needing to pick individual stocks. Robo-advisors? If you're a beginner and want a hands-off approach, robo-advisors like Betterment or Wealthfront can manage your investments for you. The key is to keep your fees low and stay diversified. Avoid trying to pick individual stocks or time the market. It's risky and rarely works out in the long run. Step 4 is all about avoiding common mistakes that can derail your progress. Here are the top 3 mistakes to watch out for. Emotional investing. When the market dips, it's tempting to sell your investments and cut your losses. But history shows that the market always recovers over time. Stay calm and stick to your plan. High fees. Some investment funds charge high fees that eat into your returns. Always look for low-cost options like index funds or ETFs. Trying to time the market. No one can predict the market's ups and downs. Instead of trying to time it, focus on consistent long-term investing. Step 5 is all about tracking your progress. Regularly review your portfolio to make sure you're on track to hit your goal. Here's how to do it. Set milestones. Break your $1 million goal into smaller milestones. For example, aim to have 100,000 by 30, 300,000 by 35, and so on. Rebalance your portfolio. Over time, your investments may grow at different rates. Rebalancing ensures your portfolio stays aligned with your goals. Celebrate wins. Reaching milestones is a big deal. Celebrate your progress to stay motivated. And there you have it, a simple step-by-step plan to build a $1 million portfolio by 40. Remember, the key is to start early, stay consistent, and avoid common mistakes. If you found this video helpful, give a thumbs up, subscribe to the channel, and hit the notification bell so you don't miss more tips like this. And if you're ready to take the first step, leave a comment below with your financial goal. I'd love to hear from you. Thanks for watching, and I'll see you in the next video.